It's all right for you.
It is,
you just made me go live, didn't you? Trying to catch me out.
Oh, that'd have been cool if the music had played on cue. Do that again. We haven't had this one for a while. Oh, we got the finger.
It's coming soon, my friend. 3rd of September.
Mate, that's next weekend.
But I discussed it with my wife, and we both said actually we might want to have a few episodes before. You know, you watch one and you're like, I need to watch the other one.
Don't Netflix do the? Don't they do the? You get all 10 downloaded and you watch.
Oh really? I don't think so. Oh, I don't know. Maybe.
It's been a while since I've watched anything on Netflix.
I know Apple don't. With Apple, it's per show. I'm watching something Ted Lasso.
Okay. What's it called?
Ted Lasso. You like it? It's a football thing. And
Ted Lasso. You're not selling it well, mate, to any of us tuning in.
No, that's true. But it is good.
Apparently, we've just lost a viewer just because of Ted Lasso.
No, it's basically a football team, and they bring this American over who supposedly doesn't know anything about football, and it's funny.
Fair enough.
It brings a new approach to things.
Talking of football, I know we've got some Spurs fans in the house, so let's just get it out of the way. Tottenham are top of the league. The league that's in its infancy, the FA Premier League in the UK. Last week, my team, West Ham, were top, and we never, ever get to say that in my lifetime that I've been on this earth. For Andy, as a Liverpool supporter, it kind of just water off a duck's back. But yeah, now Tottenham fans will be giving me some stick, I'm sure, because now you guys are top of the league. So yeah. But look, let's crack on because we've got loads of things to talk about. I'm just connecting my AirPods now that.
Yeah, can't hear you, mate.
Now
you're back.
Can you hear me now?
Yeah.
Yeah.
Now you're back.
Cool. Awesome. Just a bit better extra quality.
Yeah. Doesn't count after 3 games, mate.
I know it doesn't count. It counted after 2 games because that was when we were top. But now we're off.
10
we're not even top
games. Give it 10 games, and then you can say, "Fine, you're doing well."
You're
the top 4 after 10 games.
Mate, we've just signed Zuma. I'm very happy. We've spent almost 30 million on one central defender, but he will make our team better. Anyway, we have not come here to talk about football. We can do that in our own free time.
I thought because it's bank holiday, that's what we were doing today.
Most people will probably be out in a beer garden or in the park or doing something. But we were just saying off air, actually, that when you work for yourself, bank holidays are just another day, aren't they? As great as they are. And obviously, I know many people that don't want to work for themselves. They love their jobs and they love the structure that it gives them. But
yeah,
for us, we were just saying, like, it's every day can be a bank holiday as long as you get your SHIT done, right?
Yeah, I think like you said, I think it depends on the person's character. For some people, it actually is good for them. Like they enjoy that structure. And there are really good elements to having a job that you enjoy, like especially the social part. But yeah, it depends on your personality. My personality isn't suited to it, like being restricted. It really isn't. It's like, yeah, I'd be forever unhappy, I think.
It's very true. But we'll get to that in a second because we're going to delve into some of your past experiences. Just going to check in with some of the comments. Zach's in the house. Mystery user, please identify yourself. Click on the link at the bottom of the description for StreamYard so that we can see your picture and your name, like our first comment of the day, Raj. Good to have you with us again, Raj. I know you tune in for the crypto show tomorrow, which is every Tuesday, Crypto Like a Pro, and you tune in for the FX show as well. So great to have you all with us, and a big hello to everybody else that's tuning in on the replay, because you guys were probably out in the sunshine. Is it sunny there at the moment, by the way?
No, it never is
Oh,
sunny.
okay.
It really
so maybe
isn't.
just
It is just, yeah. Just assume clouds and you'll be spot on most of the time.
let's just let that sink in. Raj has been on here many, many times. One of our regular viewers. We love having Raj here, as we do for all our regulars. But yes, she's happy. She's happy that she's first for a change. So going back to your point, when you were an employee and you were working at the hedge funds, I guess I really should have thought about doing this at the start of the summer, but it is what it is. I can't believe this week it's going to be September. Can you?
No, it's gone so quickly.
It really has. It's
It really
crazy
has.
how it's nuts.
Well, it's not even been well, especially for me, because I'm used to going away. I'm used to going on nice holidays, and it's another year in the UK, and I'm not happy.
Wait, tell it. So Andy's got a couple of days off. Tell everybody where the exclusive resort that you're going to, or maybe not the resort, but
I'm going to Vegas. My wife thinks I'm going to Weymouth tomorrow, but really I've booked the flight to Vegas.
Wait there, you're going to Weymouth with the kids and her, right? Or so she thinks.
Yeah, that's what she thinks. But yeah, I might find myself at Heathrow Airport.
No. If the missus is involved, Andy's going to be there. He's going to Weymouth this week with the kids. Yeah. So
yeah, no, do you know what? It'll be fine. A break is good. A change of scenery is good.
100%. And I know you guys have got something more glamorous planned for next year when things open up a bit more. So let's go back to it. So we're now towards the end of the summer, but as a retail trader, some people would say it's quite quiet, right, to trade FX during these months or this period. First of all, tell us, how was it when you were on the hedge funds trading floor? Because those guys are so ruthless, they don't care. You have to make money, right? So how would you navigate that as a hedge fund trader or a manager for a hedge fund like you were, where you had these massive, 9-figure accounts, like humongous size accounts or whatever it is, and you have to manage it? How does it change? Like, what are the differences over this time period between the hedge fund guys and the retail guys?
Well, I think, obviously the markets are more quiet because people are generally going on holidays. Obviously, there's some kind of the strange circumstances that we have right now isn't necessarily that, but from what I've been experiencing, it has been quite quiet. And so that's not to say that even during the summer months we weren't trading. Like as a company, we were always trading. But people do tend to take their holidays more, so you have less traders on the floor. But you'd kind of rotate it, so there's always somebody managing accounts. Because at the end of the day, if you want to hit your returns, you can't stop trading during the summer. But what's important, I think, is you have to adapt to the market conditions that you're trading, and that goes with every day anyway. But seasonality does play a part. So if you're trading lower volatility markets, you have to adjust your strategy. So you're going to be playing range trades, fake out trades, fade trades. You're probably not going to be playing momentum trades. And I generalize because each market is unique. But in general, you have to adapt. And that goes really, really for in general as general advice, but specifically right now, those are the kind of things that will work well. And things that won't work so well are swing trades, because the market doesn't tend to go very far. It doesn't tend to trend during the summer months. So if you're positioning yourself for a long-term position, chances are that the market isn't really doing anything for you. Like, it's not moving enough to catch a a significant move. And what sometimes happens is you catch a move and you want to sort of like do the trending style trading, and you move your stop down, but you often just get the market reverses and goes back into its range. So, so I do think you have to adapt to the conditions, but there's no excuses not to hit your returns, whatever the conditions. You just have, if you're in that type of environment. Now, if you're a lifestyle trader, then you can trade or not trade. But obviously, if you don't trade, then you don't make any money. So that's the thing. That's the reality. But that's why I think having different markets is a good idea. So you're not just trading one market once you're sort of competent enough.
So when you were trading, when you were back in the hedge fund days, you would be trading the fade trades and the ranges, would you?
Yeah, I mean, levels, institutional levels were the biggest things that we traded, and news information. So we would have, you can get this information. It's expensive, but like, I think a lot of it is a lot quicker to get an institution. So we'd find out like things like, if there was a big bid on euro dollar, for example, from one of the banks, like Goldman might be buying $1 billion worth of euro, for example, and we'd know the levels. Now, that's not a guarantee you're going to make money, but you would use that information and then look to either front the order, so you jump in front of that, a bit like how we use order flow, or you'd also use it for extra information to see if there's going to be a significant breakout. But more often than not, during the summer months, if you knew of a big order, most likely it would hold because there wouldn't be enough volume to push it through. So that's the other difference as well. Like, so when there's less liquidity in the market, the banks will tend to, it's a great time to accumulate something at the right levels, because you can almost single-handedly hold the market up. So whereas in normal conditions, a lot of liquidity, it's $1 trillion market, it's hard to do that. But yeah, we would really trade off levels and short term. And, and in many respects, you have less information now, like as a retail trader, but there's a lot of that kind of stuff that you see on the charts anyway. And you can use, I think I've mentioned it before, it's not cheap necessarily for the good ones, but you can use a Squawk service. So if you're a full-time trader, you should use it. Sign up to something like Rand Squawk, but you're paying a couple of $100 a month. When I say it's not cheap, it's not overly expensive, but if you're only trading £1,000 account, then that's a lot.
You are reading, you have your finger on the pulse, you're reading the minds of your people. Just as you started saying that, someone asked that question. Is there an equivalent to Bookmap level 2 for Forex?
Yeah, great question.
Just came in.
The answer is yes and no. So not officially, but we're working on something. So it can be done using an API, and that's one of the things that we are working on in the background to create that. But it's not as simple, because in the FX market, see, like when you're looking at something like cryptos, a big part of the volume goes through 2 or 3 exchanges. So it's quite simple. With FX, it's not that simple, because there's various different things that you have to factor in. So there's the fact that there's so many liquidity providers that it's hard to piece enough of the volume together, but you can do it. The other thing is that if you're going to use a particular, let's say you use particular exchanges, you don't want to double up because they're getting the information from the same place. So there's some complications with liquidity with FX. but we're trying to find like a good solution for it, where it would give you a good idea of where the volume is. And in FX as well, there is an OTC market, which basically means that transactions go offline, and you'll see that, for example, on the weekends, and then that's not reflected until the market reopens. Whereas in cryptos, it's 24/7, so it's a bit easier. But certainly, there's a workaround, and I'll let you know. I'll let everybody know once we figure it out. Once we figure out the right formula, so that the information is useful, and once it's tested. But yeah, great question.
So just checking in with a few more of the comments. Con's in the house. Good to have you with us, mate. And also, Monica has joined us for the live. So let us know if you've got any other questions, guys. We'll just wrap up this segment by saying, so we're coming into September. Allegedly, your summer in the UK is coming to an end, although Indian summers and all that jazz. I always remember September being just as good, if not better, especially like Notting Hill Carnival, and that bank holiday weekend is normally stonking hot weather. For us over this side of the pond in Oz, it's coming out of our winter, which is great, and we're just starting to get some nice tanning weather again, which is good, so I don't look quite as pasty. But from a trading perspective now, in the hedge funds and as a lifestyle trader, what's the outlook for the next couple of months ahead in your experience over the last 18 years? How does it tend to transition? And is there anything different that you can kind of mention for anybody coming into the next couple of months ahead that we're looking at?
Yeah, I mean, typically like September, if we're looking at history, September, October, volatility increases. So there's more volume. There's a lot. There's a lot going on at the moment, like news-wise, that will have an impact on the rest of the year. And I think the thing for me, by the end of September, we'll have a much better idea of direction. I think as traders come back from their holidays, like you'll see an increase in volume. That doesn't necessarily mean a change of direction. I think more likely October, November, December, we might see that change in FX. But it's just about trading what you see. And right now, there's some good ranging opportunities that you can take advantage of, and they're great. I mean, sometimes you think, oh, they're a bit boring, but actually they're predictable, and you can make money, and that's the goal, isn't it? So that's really what we're doing it for. So as long as you can get a return, it's that's your objective. But yeah, I think towards the end of September, once that kind of we see out September, I think that's where the biggest sort of trends will happen towards the end of the year. We'll see, especially the dollar, which will have, and the stock market, which is going to be really, really affected by whether there's a hike in interest rates in the US or the sentiment. I think there's a lot of people right now predicting a stock market crash, and we'll see how that's going to affect things. But yeah, I mean, it's completely overinflated at the moment. So, but we've been saying that for quite a number of years. So we'll see.
Just quickly, just briefly, because that could be a whole nother show. Maybe we could talk about the stock market crash. But what's your kind of overall elevator 30-second kind of sentiment around when you hear people talking about that? Because it has been talked about for a number of months and years. So how are you feeling about that right now as we sit here now?
Well, look, I mean, if there's like sometimes it takes one thing to create. I mean, typically speaking, like there's money either flows to risky assets or flows to risk averse assets, and like right now, but then you've got the added equation of cryptos now, which is making it quite interesting. But like you've got. So like typically when rates are low, the stock market is bullish, and the rates are super low now. So there's no logical reason to take your money out of the stock market and put it into the bank to earn pretty much zero. But then people are, because like that's the thing. So now it's like, okay, well, I could take it out of the stock market and possibly put it into a different asset class. So it adds a different layer. But either way, money coming out of the stock market will create a crash. It is super overinflated in the US, and I think that will obviously have an impact on the whole market. But the thing that you need to understand is really, where is money flowing, risky or risk averse, and that's going to make a big impact on currency strength and where money is going to flow. So we'll keep an eye on it, and we can certainly do a show on it so people can get a better understanding of the dynamics.
Very cool. So look, that was Andy's elongated elevator pitch. Imagine being stuck in a lift with this guy. If that's what you get just from the elevator pitch, you would have a whole portfolio, an asset portfolio coming out of that lift. It would be a pretty interesting scenario. Just out of interest, who would you want to be stuck in a lift with? Either past or present. Is there anybody that you would love to be stuck in an elevator with that you could just pick their brains or anything else?
Probably Warren Buffett, the greatest investor of all time. Or
But
George
he's the
Soros.
greatest. Oh, mate, he's yeah. I've got mixed feelings about him. Let's just put it that way. But that's a judgment I hold because I haven't ever met him in person. But yeah, George Soros
He's
is
single-handedly
an interesting character.
Yeah, but yeah, one of those two, I'd say. But I think, like, I was watching something about Warren Buffett the other day, and like, what I love about him is that he was into this stuff at 7, 8 years old, and 11 years old he was investing. But he admitted that he didn't know a lot, and he was just reading books and learning. And it wasn't really until he was 19 that he actually started to do this more as a serious profession. And he's a billionaire. So it's like, wow. I know he's obviously on a bit now, but he, like, to think from 19, coming from humble beginnings, he wasn't given the money, he's not a multi-millionaire. He's a billionaire. That is amazing. And it is the power of compounding. But the biggest thing that I guess that he sort of preaches is just keep learning, just keep educating yourself, keep reading. So most of his day is spent reading and learning. But the biggest thing is he implements what he learns. So he'll pick something up and he'll go and use it. So what most of us do is we read stuff and we're like, we feel good. We're like, oh yeah, brilliant. Nutrition, amazing. I know how to feel good now. I know, yeah, green juices. And then you don't do it. You have one green juice and you leave it. Or you learn a new way of investing and then you don't do it, right? You think, oh yeah, well, great idea. And then you leave it, you get busy. I think that's one of the key things is that he picks something up and he's like, yeah, that's a good idea. And then he goes and does it. And then the power of compounding. So don't try and become rich in 2 minutes. Just every year, make sensible investments that will grow over time and just keep doing it. So take a little part of your salary, keep putting money into the system, and eventually you're going to be wealthy. Like, maybe not billionaire wealthy, but you don't need billions to live a good life.
100%. Amen to that. Great message. So Con's saying he would like to be stuck in a lift with Eddie Murphy because life's too serious. That would be quite a good one. And Zach is saying Michael Faraday or Richard Carrington. Both are dead, but I would be a happy man. I'm going to be completely honest and say I have no idea who either of those two are. Sorry if I offend anyone. Do you? Do you know who they are?
No, I don't, to be honest, no.
And that's quite something when you and I both don't know the answer to something. So please, Zach, enlighten us or anyone else. Let us know why. What's so special about Michael Faraday or Richard Carrington? Right. So with that being said, let's focus on what we can focus on, what we can influence over the next few days. And one of those things in the FX world is all the news that's coming out this week. So let's break down the big FX news. And then from there, we'll take that information and go and do some live chart analysis. So, yeah, Mr. Demi, let's get it started with... Oh, where is it?
Can you see my screen, guys?
Yes, sir. Here we go.
Okay.
Oh, that's the wrong one.
Okay, right. So let's start, guys. So today is obviously a bank holiday here in the UK. So I'm sure you guys are off doing something nice. So not really anything going on in terms of like news. So again, it should be a fairly quiet day today, and tomorrow, nothing major coming out. And then it kind of starts on Wednesday. So we have from Australia, GDP quarter on quarter. As I've said a few times, any quarterly events, they can potentially have a big move because it's much easier to get a quarterly number wrong. So what often moves the markets is not the number, but how different it is to the prediction. So we're looking at a growth previous quarter of 1.8% in GDP in Australia, but it's forecast to basically be only 0.6% right now. So with all things being equal, any number between 0.6 and 1.8 will give you a kind of mild increase in the Australian dollar. Anything over 1.8 will give you a very big move up in the Australian dollar. And if it comes out as 0.6, the market will pretty much not do anything overall. So it might move a little bit up and down, but eventually the news doesn't have any impact. And a number much worse than the forecast will obviously mean the Aussie goes down. We've got some OPEC meetings during Wednesday as well that will have an impact on any oil positions you have or CAD positions you have. And ISM manufacturing doesn't tend to be a big mover coming out at 3 as well. The big one, guys, is Friday. Friday is the first day of, it's the first Friday of the month. We have non-farm payrolls and we have the average hourly earnings coming out. This time we don't have anything from Canada, so that kind of makes it quite interesting. So CAD must be next week, but we have the following. So employment numbers last month were 943,000 and expected to be 750,000 this time. If we have a look at the chart, you'll be able to see essentially, like if you have a look here, it tells you how good. So if you want to have a look at the numbers, this will give you an idea. So if you kind of take back these numbers here, so the blue, I believe, is the forecast, is it? So actual numbers in blue, forecast is in gold. So it will kind of tell you basically in general whether they get it right or wrong. So what's this one here? So this one, you can see the forecast was 375. It came out as 181. This one here was 916 versus 652, 266 versus 990. So what you can do is you can go back and study these moments in time when these previous numbers came out, and you can kind of see what impact it had on the Aussie in the past. So the last two here were slightly off. So yeah, so you can kind of go back to those times and have a look at these dates. So yeah, that's really what we the big ones for the week. I think again, I'm expecting a fairly quiet day, but fairly quiet week until Friday. But yeah, Wednesday might be interesting. Sometimes as well, guys, I think like after a bank holiday, you might see a bit of volatility in sterling tomorrow. So any traders that from institutions that were, let's say, in position in sterling, they would have closed out on Friday, then looking to reopen again tomorrow. So yeah, potentially there's going to be some volatility in sterling. But yeah, I think the big one here is the dollar for the week and the Aussie. That's where the biggest moves are probably likely to happen.
So with that being said, is it fair to ask, or I think we know, which currency pair are you leaning towards doing some live trade analysis on for today?
Yeah, I mean we can take a look at the Aussie dollar. We can even look at sterling Aussie, because of the reasons that I said before about sterling. The thing sometimes when you look at the Aussie and dollar together, when you've got two news events, you could get caught out for a swing trade. But yeah, things like Euro Aussie could be interesting as well. Or we can look at cable Euro dollar. But if I bring in, I'm happy to also take a request on one of those pairs. If anybody in particular likes it, I think any of those will be fine. And I'll bring in the charts. If you guys, I'm happy to take two. If anybody fancies going through a particular one, that works.
I think it makes sense to go with the data. Let's keep following this through and go in your mind and see how you do this. So you've looked at that, and then how would you analyze this? I know I'm speaking on behalf of people, but I don't think there's much coming in on the comments, and I think that'll be a useful process to just keep going through in your mind of how you would do it.
Well, I mean, last week we did the Euro dollar, and we had this drawn in, and you can see it's broken that, but we can, because there's not a lot of new things we can talk about. I think it's definitely worthwhile looking at the Aussie. So let's do the Aussie dollar.
Cool. I know that's probably your top two favorite currency pairs as well, isn't it?
Yeah.
So this one,
definitely is. I do like the Aussie. I do particularly well with the Aussie dollar, both, especially day trading, but both day trading. It's just a really nice mover. So let me just set this up, guys, and we will do the Aussie dollar today. And let's see what we can find. Okay, let's do it. And I'll just bring in one more chart. This one, hourly chart. Great. So let's start with the weekly. Let's start with the weekly. So what I want to do is, let me see if I can log in to a different account. Okay, great.
Incoming mail.
Because I want to use our indicators to make this a bit quicker. So you can do it manually, but certainly it just speeds things up a little bit, just to be able to quickly see where the key levels are and where we are within that. So this is the weekly chart. Good strong bounce. from quite a nice zone. And this is a good level actually, guys. So this is a good level to make a note of here. You can see there's a double level there. They're so close together. And if you actually look at this level and see it through, so you can see it's a little bit, pardon, it is a lot darker. It's a very reactive level. So look, see how the market does really like it a lot on the weekly chart. So even back here, wow, it's a really, really key level. So, and we're below it. So around that 73.86, that's the thing, like information you can get really, really quickly. 73.86 is interesting. Let me have a little look at something around here as well. Just so we see the big picture as well. I'm going to have a quick look at a couple of things here. So, just want to see if this is a good reactive line. Yeah, it's not too bad. So this is just for my my reference point, just to see if we are kind of close to a. That's really interesting. Yeah. Okay. So I've got a couple of things here that. So this is kind of stopped at one of these lines that I would expect it to, and now the question is it going to go higher? And we've got this level here. So I think short term, we definitely want to look at this little zone up here, 73.86. But there is a possibility the buyers might push it up from here. But we'll do a bit more work. And let's do some extra work now. I'm going to put in my down fibs. Okay. So the 618 comes in there, 74.18. Quite like that zone. Let's also put in our downtrend lines. So it just takes a little while, guys, just to build the picture up, and then we'll see where the opportunities are. So once you've built this picture, it becomes much easier. But I like to do it from scratch when we do these, rather than giving you, if you see my charts ready made, you're going to be completely confused. And that's the current trend lines. So right now, we've just broken this inner trend line. There is some room to go up towards this next trend line. That's kind of what I'd be expecting right now. So, and if you look at the way this has gone up, it's quite aggressive. It's pretty bullish in that sense. So there's certainly some buying power right now. We'll kind of see. I mean, this candle here hasn't. It's closed above it. I like to sort of see at least 50% close above. So at the moment we're fully above. I'd be interested to see how this is going to react to it, because we do have a level of old support that becomes resistance here. So this is going to be interesting here to see if, you know, what the market does. And we're going to go to some lower time frames and see if we can figure out the picture. So let's leave it there on this one. Let me just go to the 4 hour and have a little look there. And once we complete all of this, we'll have a good idea of what's going to happen in the Aussie dollar. So this is the 4 hour chart. Okay. So why don't we put in the up fibs, because that could be worth knowing. We could be in a interesting area. Where are they? Okay. So we have no pullback yet, but it is a reversal. So sometimes with reversals, you may not get the pullback, in which case you'd be looking at an overextension up to here. 74.33 would be the target if it does indeed just push up from here. I'll draw in the down trend lines here as well. Let's see where we are. All right. And we'll put in the DTR for the day. Let's see where the DTR comes in. So you can see actually it's been holding really, really well. The upper red line. I mean, this was oh, my battery's going to go. Sorry, guys. If I get switched off, it is. Why do I keep forgetting to put it in? There you go. Yeah, so that was a big move there. So I would consider, and you can see there as well. So this is the kind of signs that you need to spot. Look, the market broke it there and broke it there, but before it was kind of not breaking it, right? So that's a sign of possible changing conditions. So what you would want to do is to just adjust this multiple here. Probably 1.5 is the right amount. We'll change it to 1.5 to give us just an idea for the day. That's perfect. So you can see the extremes fitting in really nicely. And that's not too far from the 30. So I'd say as a day trade, that area there looks like a nice area for a fade. That's just like short term. So if we look at that there. So I think if the market rallied from here, for example, that would be a great target. Equally, even if you took a long trade today on a short-term time frame, if you could target that on the long side. And going back to what we said before on the fibs, this one here takes you up to 74.36. Let's go back over here for a sec. We're at 74.36 on the daily. 74.36 is about there. So it's quite a decent level. And it is the 618 as well on the down move. So the two, I'd say right now, if you find a good long trade, I think that's a good target. You can also look for a potential short around this sort of area, short term. So these are like the key areas right now that I'd be focusing on. This is short term. So what you'd basically be planning for here is if this market went up, you could possibly take a long trade because it's broken the trend line from here. Then you'd be looking to take profit there and possibly even short it there. I would also put in, personally, I'd put in like my market angle and look to buy it again for the next possible move up. And then I'd be looking to potentially sell it around this sort of area here, 74.30. And then look to see if it does go a bit higher, look at the trend line then as a possible another short. So, I mean, like, as I was kind of saying before, right now, taking swing trades is really, really probably not the smartest thing to do. I would rather be in and out the way I'm describing. Just take short-term opportunities like these. So there to there, backwards, and then long. So it would look something like that. That's the sort of thing that I'd be roughly looking for. And you could buy, sell, buy, sell. So buy, sell, buy, sell. And of course, with confirmation, because I'm predicting these things ahead of time. And we do have data coming out as well. So like it may, for example, data might go there, data comes out, doesn't get there, and it just flies up. So then you'd be saying, okay, well, now I'm going to be looking to sell maybe on this trend line. So you have to change your plan depending on what happens. But based on the things right now, there's probably at least two, three trades there that you could take advantage of and make some money from it. Any questions? Are you talking, Gavin, by the way? I don't know if you are. So I can't hear you. We've lost him again. No. Maybe it's me. Winning. We're being taken over now. Guys, is it me or Gavin? Is it me?
Right, I've just put my AirPods back in. Can you hear me now?
Now I can hear you, yeah.
Cool. Okay, so what I was saying, that means we won't be able to play any music out at the end of the show, but that's fine. So what I was saying was these two or three, first of all, thank you very much for this. Darth Demi strikes again, which is great. So these 2 or 3 trading setups, are they day trading setups?
So they will be more like day to 2 days potentially, yeah. So like this one, here and to this one would be a day trade. This one would be a day trade. And then, so if it completes, if it goes up, completes that cycle, then you have this A, B, C, D cycle, and we have a new A, a new B. And then you say, okay, I want to buy Aussie dollar now with a stop behind this A. That would be more like a 2-day trade potentially. So what you would do is you take your fib tool, you draw from there to there, and you say, right, okay, I want to buy here or here or here. This is the best price, but you don't always get that pullback. So it can be one of the minimum. The minimum would have to be this price here. So then you'd be looking for, if I just zoom out, you'd be saying buy, this is like the minimum C, which is a 38.2, and you target the 1618 minimum, which would take you up to that line. So if, let's say you did nothing, you didn't take the day trade, you didn't take the fade trade, but you wanted to find a swing trade, you let these things happen, and then you say, right, okay, I want to buy at the 38.2, stop there, target there. Or I want to buy at the 618 down there, stop there, target there.
So because this is all on, oh, sorry, mate, go on.
Yeah, no, that's kind of what I'd be looking for.
So because this is on the H4 chart, this is all within the next 2 or 3 days then, right? Maximum. So
Yeah,
there's two
I
or
mean,
three setups within the next 2 or 3 days.
yeah, I mean, with exactly, but these two here, because we're using the DTRs as well, like you could definitely
Yeah,
do
so
these
that's for
ones.
today.
Yeah, I mean, the fade especially should be a day trade. This move from there to there potentially doesn't need to be. You could hold it overnight, as long as there was no news overnight. So if you bought it today, for example, there's no news coming out, further news coming out today, then that would be fine. And you'd want to place your stop behind here, the green DTR, because that's the lowest predicted level it would go to today, because this is a 1.5, don't forget. So even if you got it wrong and it went down, if your stop is below, you could survive and then still catch the move. So that would be the sensible stop.
Awesome. What a breakdown on the bank holiday Monday in the UK. Yeah, that's pretty much everything we've got for you today. Hope you enjoyed the show and everything that we've provided here. If you're into the world of cryptos, then we'll be back tomorrow, same time, same place, inside the Crypto and FX Traders Club, or live on YouTube, depending upon which one you prefer to watch. Midday tomorrow, Crypto Like a Pro, the live show. Is there anything else you want to say on FX before we leave?
No, nothing in particular. I think somebody was asking about the service that I mentioned before. It's Ranscork, but there's other ones as well that are a bit cheaper. So if you want a Scork service, Ranscork is one of the most famous ones. But yeah, no, other than that, have a good bank holiday if you're in the UK. We'll see you tomorrow. And yeah, have a good one. Thanks for being here.
Thank you, guys. See you tomorrow.
Take care.